Hello everybody and welcome to my analysis of Coinbase. Now today I'm talking about Bitcoin, I'm talking about crypto, and I'm talking about Coinbase. So it goes without saying that none of this is investment advice ever. Now I have to put out of the way, before I talk about Coinbase, I have to talk about crypto because Coinbase is kind of a proxy for owning a chunk of the crypto ecosystem. I think that's a good way to look at Coinbase. And so if you don't believe in crypto, if you think crypto is going to die, then don't invest in Coinbase. Essentially, like there's no point. But I think you'll find that it's a fascinating company, and I am bullish on the company. I own the company after redoing an analysis on the stock, right? I am becoming more bullish on this company than I've been since I entered the position, and I haven't touched it. So let's talk a little bit about Bitcoin, about crypto, and then we'll talk about Coinbase and Coinbase places in the ecosystem, and then I will provide a valuation of Coinbase and my view on the stock. So first of all, we need to face the fact that Gen Z and Millennials, as well as Gen X, love Bitcoin and love crypto. And if you look at the assets class, like out of the people who have investments, like you can see that cryptocurrency is right behind stocks. So there's more people that own crypto, for example, than mutual funds. I mean, this is like really big stuff. And this goes with my thesis is that eventually crypto will likely replace bonds in people's portfolio because, you know, who buys bonds today? Very few people. Bonds is you lock in underperformance guaranteed. So no few people buy bonds. And my guess is that Bitcoin and crypto over the long run will replace bonds and will become the next big asset class. And we can see that Gen Z and millennials, I mean, there's actually more millennials, perhaps younger millennials, who own crypto than stocks. And Gen Z, you have, about half and half. Gen X, clearly more stocks. Boomers don't touch crypto at all, and they hate it, as we saw the CEO of JP Morgan recently, talking about Bitcoin. Anyways, not a reference. So what can we say here? So first of all, we need to distinguish crypto from Bitcoin. I think it's very important. So first, let me talk about Bitcoin, and then I'll talk about crypto, because they're really two different things. Very different things. So Bitcoin is the oldest form of digital property. It's blockchain-based digital property. I know there were some e-gold and kind of stuff before, but blockchain-based digital property, they were the first successful, widespread adoption cryptocurrency. And cryptocurrency is a misnomer because Bitcoin is not a currency. Bitcoin is much closer to a commodity, and it's well accepted, whether it's the SEC or over IRS, that Bitcoin is treated like a commodity. So like gold, like silver, any commodity is kind of how Bitcoin is treated and seen as most country. But Bitcoin is a commodity that has network effects, which is like one of the big differences between gold. Gold has it has network effects in the sense that more people talk about it and then more people go buy gold, but Bitcoin's adoption actually follows a network adoption curve and has network effect, and I believe, much of the belief behind investing in crypto is that we've reached an inflection point. We've reached the beginning of a S-curve on Bitcoin. Not guaranteed we have on other cryptocurrency, but on Bitcoin, I believe we've started an S-curve. So we are, we're past the 5%. So the S-curve is here for Bitcoin. And so when you look at the statistics, these are statistics I gleaned over the internet. So you have about 1 billion people in the world who have used Bitcoin. So that's 1 out of 8, right? We're 8 billion people on Earth. So 1 out of 8 people have used it. 89% of Americans have heard of it. 46 million Americans, 22% of adults, own some Bitcoin, which is it's a staggering number. It is a staggering number. And 24% of Americans claim they don't understand Bitcoin at all. And, I think this closely matches the population distribution of the US. And so there's one thing a premise that I want to say out is that many people may say crypto is worthless, but there's enough people that agree that BTC is worth something. Enough people agree that BTC is worth something, and they see different value in it. I think one of the big adoption factors of Bitcoin is that, of course, it cannot be seized. So, if you don't live in Europe or if you don't live in the US, seizure is much, much more common. Look at what happened in Argentina multiple times. So you have a keen understanding of the value of money that can't be seized, and so that's a value proposition insane to most people. It can be stored in your head, so you have no counterparty risk. And so when you look at things that happen in, say, Lebanon, for example, or Cyprus, then you understand the value of actually storing the Bitcoin in your head in the form of a passphrase, as opposed to just have it on a bank account where you have to rely on a third party, and you have to rely on that third party being solvent. And the third reason why people own Bitcoin is that they bet on adoption. Like, they bet on that S-curve that I've just talked about. They bet on the beginning of that S-curve. And really, that adoption S-curve has begun. I believe we're past the 5% where we kind of know it's not going to die. So we're at what, 10-12% adoption of Bitcoin, and this is the kind of thing that are happening, which I think is very, very promising for Bitcoin. Keep in mind, despite the volatility, despite the fact that Bitcoin has lost 70% of its value from the peak in 2021, look at what you get. This made the news recently. So you can buy a digital wallet at Best Buy. This is Best Buy. Best Buy has a booth now, and you go to Best Buy and you can buy a ledger, and you can buy your digital wallet at Best Buy. This is mainstream as it gets. And then another example of the mainstreamity of Bitcoin, where it's becoming mainstream, is, well, we have a few examples. For example, the IRS, when you file your taxes, asks you if you own Bitcoin. Like, that's an example that is becoming a little mainstream. What website do you go to that doesn't have a ticker of Bitcoin? Another sign that it's becoming mainstream. And this is, I think, one of the more interesting signs is the Bitcoin ATMs. And so I don't know where you're located, but if you're located in the US, I suggest you search Bitcoin ATM near me, and there's like 4 different brands of ATMs that you can find. And so when I type Bitcoin ATMs near me, I have maybe 10 ATMs within like a 20-mile radius. Like, there's a lot of those. There's a lot of those, I guess. Gas station, grocery stores, they're all over the place. So so these are just signs that is becoming mainstream. And as far as having value, I think I want to emphasize the fact that when something is known by everybody, just by virtue of the fact that a money is known by everybody, it's going to have value. And so I think one of the good frameworks to use to analyze Bitcoin is to analyze it as a brand. Bitcoin is a brand. And the biggest brand, but of course Bitcoin is a currency, so you can't really treat a currency as a brand, but you have to ask yourself, which currency has a good reputation? And think of Bitcoin in terms of reputation. And we can clearly see, like, if you look at Brand Directory, which is a ranking of global brands, Amazon's brand is valued at $350 billion. Apple's brand is valued at about the same. What would Bitcoin's brand be valued at if it were valued as a brand? And my guess it would be valued in this, in this level, like few hundreds of billions of dollars. And so when you look at the market cap of Bitcoin today, which is 440 billion, and like I said, my guess is that Bitcoin would be worth a few $100 billion. You can see that much of the market cap is just encapsulated in that brand. I mean, Bitcoin has become a brand. Many people know Bitcoin. More and more people will know Bitcoin, and we've begun an adoption curve. So that's my thesis. Obviously, if you disagree with that thesis, it's really hard to get behind Coinbase. Let me talk just a little bit more about Bitcoin, because I think it's important to address some of the rebuttals, some of the reasons why people would put Coinbase aside. They will tell you, for example, they're going to ban Bitcoin, right? This was this is like an old thing. I think Peter Schiff has been saying that. Lots of legacy finance folks have been saying that. And my answer to people who say, they're just going to ban Bitcoin is this. Bitcoin can only be stopped by stopping the internet altogether and never ever restarting it, because those nodes are going to stay connected to the internet. So it's important to go back into the technical aspects of Bitcoin, right? Bitcoin is what? It's the Bitcoin protocol. The Bitcoin protocol runs on layer 4 of the internet. That is the same layer as the TCP. You may have heard of TCP/IP. That's Transfer Control Protocol. So it runs on that same low layer of the internet. You know, it goes back to the days of ARPANET. You can't stop internet because it runs on a lower layer. To give you an example, like FTP or HTTP, right, for your website, that's layer 7. So Bitcoin is very close to hardware. It permits instantaneous, cheap, permissionless, anonymous exchanges of bits. You know, it's important, and this is something that Elon Musk has said multiple times in the founding of PayPal. Money is just a database. And so Bitcoin is a database very, very close to hardware. It's a database that is recording who owns what Bitcoin. So those bits, right, those zeros and one, what is Bitcoin? Those zeros and one, those bits represent Bitcoins, which are coded into wallets and private keys. So you have a wallet, which is public, which is your public key, i.e. your wallet. That's what you would give to friends and family in the form of QR code, so they send you money. And then you have a private key, which can be in the form of a QR code, but can also be coded in a 12-word sequence. And so if you code your private key into a 12-word sequence through a hardware wallet, then you just have to memorize 12 words, and you have money in your head. So that's the whole idea of Bitcoin and passwords and wallets. And these bits, you know, are encoded into wallets and keys. So again, bank accounts and passwords. And there's a ledger, which is distributed among tens of thousands of nodes. Nodes are these tiny little Raspberry Pi type computer that people just plug in the wall. There's tens of thousands of them that check the network for consensus and update the network. And who updates the network? It's the miners. The miners compete for the right to update the network every 10 minutes. And I also think, and this is important from I think a lot of people criticize Bitcoin because of energy use, but I think it's not understanding why energy is so key to the story of Bitcoin. Why do we say that Bitcoin is the hardest property on Earth? Well, that is because at a very, very fundamental level, if you want to be able to break code, right? If you want to be able to break this code to steal someone's Bitcoin, like we see it happens with banks, credit cards all the time. These banks, these credit card companies, these passwords, these identities, they get stolen. And they get stolen. Why? Because it's very easy to imagine, say, a state actor do a denial of service attack with like $1 billion. Like with $1 billion, you can buy enough computing power in order to disrupt the network. Well, that's why the energy story is so important to Bitcoin, because in order to disrupt Bitcoin, in order to steal a Bitcoin, right? And steal a Bitcoin could take the form of like transferring Bitcoin from one wallet to another wallet without permission, or it could be stealing in the form of we're going to change the code and add inflation and say, oh, we're going to change the time to one limit. You'd need an attack of 51% of a miner network. And today, I mean, while Bitcoin was risky, you know, 2013, 2014, when it was nascent, it was possible to envision such an attack. But today, it's not possible to envision such an attack because you would need to accumulate 51% of all of the world's mining equipment, which would be extremely, extremely hard to do, you know, in terms of scale, scale of the data centers that you need. And then you need to have enough energy to power them all. So you need to have enough energy to power them all. You need to get all of the power equipment. And of course, you need to do this faster than Moore's law. You better be able to pull this off in a few months, because if you don't pull it off in a few months, the next miner generation is gonna make your miners that you just acquired obsolete. So that's why it's almost impossible. And to give you an idea, like I played with this and made some calculations. It's like you need something like $10 billion equipment, of mining equipment that you need to get. And then you need the equivalent of 7 of the latest generation nuclear plants running all together, feeding this system. And you'd probably need to do it within a month. Within a month. You wouldn't be able to do that in more than a month. Because of Moore's law, because it's a very, very competitive space. It's a very Darwinian space, this Bitcoin network. And of course, there's other theories on quantum computing, but I've studied quantum computing as well, and I am very confident that this would not impact the Bitcoin network. But that's a topic for another video. But so just keep in mind this layer of security. The fact that you need the world's largest computer network to secure Bitcoin is so essential to the value of this project. You know, it affords the common man the ability to have the protection bigger than any nation on your property, on your money, because theoretically speaking, property is only valuable as long as you can defend it. And Bitcoin is guarded, is defended by the largest, most energy-intensive network of computers, which is like so essential to understand how Bitcoin works, and that's why it's an industry, etc. There's lots of philosophical reasons. Like keep in mind, like Bitcoin and blockchain is not just a field of psychology; it's a field of philosophy. It's a field of anthropology. It's a field of economics and Austrian economics. It's almost a theoretical field. You're going to have hundreds of PhDs on this in different topics within that field. Like I have very little doubt about that. It's a revolution. Okay, I'm a little bullish on Bitcoin, but moving on. So the discovery of digital scarcity in the form of BTC, that discovery has led to crypto. And what we call crypto now is kind of like add-ons to the original idea of Bitcoin. You know, so they've added all of this stuff, and now it's gotten so much more advanced. But Bitcoin remains number one and the most advanced network because of the miners, because of the security, because of the network effects, because of the value of the brand. So that's why we need to distinguish Bitcoin from the rest of the industry. So Bitcoin is a commodity. This is, and you have a lot of commodities that all have some kind of different features. But I see one commodity was like 98 or 99% of all of the monies out there that are competing for money is Bitcoin. That's the strongest form of property out there. And then I think you could develop like a niche case for, it's a niche, right? So tiny, but you could develop a niche case for some other commodities. And to me, the most compelling niche case that I found for a commodity is Dogecoin, which is kind of like a fun money, you know. And you know, like if you're 19 years old and like Dogecoin's funny to you, like it's just a thing. Like it's just a thing. Like a lot of people find Dogecoin to be fun. And so it could be kind of like a fun money of the internet. And it's entirely, I mean, we have different commodities that we value in the world, right? We have gold, we have silver, we have bronze. People value different commodities in the real world. And it's entirely plausible that they will value different commodities in the digital world. But in the real world, there is one winning commodity above all, and it's gold. And I believe in the digital world, the winning commodity is going to be Bitcoin. And then you're going to have special use cases because some people, you know, like Dogecoin. Just like in the real world, some people like Chrome, for example. They think it looks nice. Anyways, moving on from commodities. Then you have a whole different setup, and this is the best word I have to describe this right now is a storm. Like it's an innovation storm. We don't know where this is. We don't know where this is headed. I mean, we're pretty sure that smart contract platforms are going to be around for the long run. That you know, Ethereum, Solana, Cardano for some specific applications. Like we're quite confident that these are going to be here for the long run. But there's so much out there. Like there's infrastructure projects like Helium. Helium is a big one, which is a network of radio miners and people who installs little radios, and they get paid for installing these radios, and then anybody can buy the token to get access to the radios. Anyways, it's just very interesting. So you have a lot of digital infrastructure projects. Arweave is another one, which is like a data infrastructure project. So you have a lot of tiny infrastructure projects, and you have governance tokens, which are mostly like for crypto banks. Like if you have crypto banks, they'll develop their own governance token, like CRO for crypto.com. That's a governance token, and then you get a perk. This is actually very similar to stocks, and it's not unlike stocks. Like some stocks give you perks. Like if you get the 3M stock, you get the Christmas, the investor kit for Christmas with a whole bunch of 3M products. If you get, or I think it's Royal Caribbean, if you get the Royal Caribbean stock, if you own 100 stocks of Royal Caribbean, you're going to get a 400 cruise line credit. Like companies give benefits to their stockholders. Berkshire, if you own Berkshire, you're going to get a discount at Geico. It's just something that we've kind of forgotten about. But that's how I look at governance tokens. They're much similar to stocks. And my guess is that all of these, whether it's smart contracts, infrastructure projects, of governance tokens, all of these, they're a mess, like I said, it's a storm, but many, and that's kind of a question mark right now, but many of these projects may be securities. Like the Howey test may determine these projects to be securities. And so if they are securities, they're going to be regulated, and this is going to benefit Coinbase, because Coinbase is the king of regulation. They are compliant. Compliance, that's all they are. That's all they care about, is being compliant. So this is going to benefit Coinbase, I believe, if some of those are regulated. And it's important to realize that, especially for smart contract platforms, so these are called layer ones, right? Many people call them layer ones. And within those, you have other tokens that are called layer twos. Layer twos, right? And so NFTs, for example, you can have an NFT on Ethereum or on Solana, right? And you can you can swap them within different ecosystems. Games, sometimes you'll have the first level and the second level, and you have the money for that game. So you have a lot of layer twos, and perhaps the most popular layer two application is stable coins. So when we talk about digital currencies, i.e. stable coins, right? It feels like crypto, looks like crypto, but it's pegged to a national currency. Like USDC or Tether are pegged to the US dollar. One Tether, USDT, or one USDC, USD coin, one of those are pegged to the US dollar in theory, and they trade in line. And these are typically implemented on layer 2 solutions, right? USDC, the biggest stablecoin, is implemented on Ethereum. So you can see how smart contract platforms, they're likely going to be treated as securities. But anyways, that's kind of a wild west out here. Bitcoin is definitely the most established coin of the ecosystem, I would argue. All right, so let me move on now to more Coinbase-specific content. So, what is Coinbase? What does Coinbase do? Well, Coinbase is the regulated, it's the main regulated, US-regulated gateway between the dollar, the euros, the pounds ecosystem to the Bitcoin and crypto ecosystem. It's kind of a tax on everything crypto. That's what Coinbase is. Coinbase gives you a tax on everything crypto, on top of also being a crypto bank, right? They're a custodian. They're also a crypto bank. So how does Coinbase work? Well, right, people who are interested in crypto, one thing they could do is they could get a bunch of GPUs, or they could get a Bitcoin mining machine. And if they get GPUs, they set up a computer and they mine some of the last remaining proof of work coins, because you can't really mine, you can't mine Ethereum anymore. So they mine something else, but you can still mine. And when you mine Bitcoin, you go on a decentralized exchange and you exchange it for whatever token you want. That's kind of a hard way to do it. Or you go to a Bitcoin meetup and you exchange cash for Bitcoin, or you do it with a company like Coinbase, which we'll see is one of the last ones standing. So what you do is you come to Coinbase, you do all of your regulation stuff that Coinbase is compliant with, and that's Coinbase's strength, right? Really. I mean, that's why it's. I think it's a good investment. Is Coinbase is compliant with the government. They do their KYC right, their AML right. That's anti-money laundering and know your customers. Right, so this is what the government mostly cares about. They don't want terrorists to be using that. So Coinbase really is on the side of the regulator, and that's a good thing because you don't want terrorists using that. I mean, there's always questions about privacy, but that's a different topic altogether. So once you comply and you comply with Coinbase, then you have access to a whole bunch of stuff. So you have access to, and this is where they still make most of their money, is trading. So just like, when you register for Schwab or Fidelity, then you can trade stocks and choose your stocks. Well, if you register for Coinbase, then you can get your fiat from the bank world, send it in there, and you can trade your favorite cryptos. And so that could be Ethereum, Dogecoin, Solana, Helium. So you bet on the next infrastructure project. I don't know. You bet on, I don't know, Arweave maybe, because you think storing data is going to be a big deal on the blockchain, and so you bet on a data storing blockchain, or you bet on Ethereum because it's the biggest smart contract chain out there, and they have the best NFTs, and they have the best stable coins, and you believe that the Ethereum blockchain is the one who's going to win. You're essentially investing in blockchains, right? Which may, as we'll find out, in a few years, which may actually be treated as securities by the IRS. But so you're trading all of these projects, and let's face it. And I believe less on Coinbase because Coinbase is very strict in what it selects. But there's quite a bit of speculation on some of the tokens. But I want to give kudos to Coinbase here because one of the things that Coinbase does a lot is education. They group, right? They group the tokens that you can buy, the stocks that you can buy, and they also educate the traders. It's like it's both a mix of education and trading, right? Coinbase is going to be very, very stringent as to what it lists on Coinbase, and so that goes hand in hand together. What you can do? What else can you do? So you have your USD, pounds, or you can bank directly in crypto with Coinbase. So you can convert your crypto to USDC, which is a stable coin crypto that Coinbase owns 50% of it with the Circle consortium. And you can own your crypto with Coinbase and use Coinbase as a bank, as your custodian for your dollar, your digital dollar, your US dollar in digital form, and for your crypto. So you can use Coinbase being a fiat user, right? You can use Coinbase and just have USD on there, and just earn interest on your USD, and cozily use Coinbase. So Coinbase can also be seen as a bank that already has implemented the digital dollar. Like the digital dollar is already alive on Coinbase. Meanwhile, banks are still running Cobalt on Fortran software from the 1960s. So banks are running software from the 1960s, and you have Coinbase who's running blockchains. So you can stay in the fiat world, you can stay in the regular US dollar, euro, pound world, all on Coinbase. What's fascinating with the bank offering with Coinbase is that this is live. You can now spend your Coinbase dollars in the real world with a Coinbase card. So you have a Coinbase card and you spend your Coinbase dollars. Like, how crazy is that? How innovative is that? They are set up. They are set up for the future. They're set up to be well positioned. If digital currencies become a thing, which it's the writing is on the wall that they will become a thing, there will be a private digital currency. No investment advice, but I think there will be one private digital currency. And so maybe Coinbase is going to have a big play in that private US dollar currency, regulated by the Fed. And don't forget, this company is always going to be all about doing things right, by the book, and regulated. Okay, what's another great thing that Coinbase has? They have Coinbase Ventures, and so they have their hands in just about everything. So I talked about USDC already. They own 50% of USDC, which is stunning. That's a stunning move of strategy. Like I'm impressed. But they have Coinbase Ventures, and so if you look up Coinbase Ventures and see everything they own in the ecosystem, it's it's like a black hole that has its hands in everything. It's like a Google for Google is to tech what Coinbase is to crypto, if that makes any sense. They have their hands in everything. So, big deal. They act as a custodian, I've already said that, but they act as a custodian for you, as an individual customer, right, a private individual, but they also, and I think this is a big part of a business, they are custodians for institutions. So they, like if you are a large institution and say you want to buy, I don't know, $50 million worth of a cryptocurrency or a Bitcoin, Coinbase is going to help you with that. They're going to help you acquire that much Bitcoin. They're going to help you make sure that you don't, crazily impact the market. They're going to be if you're trying to buy, say, $50 million of crypto, it's not as simple as that, right? You need to go through someone very, very serious that is regulated. And Coinbase has that, and they also serve as a custodian. So a lot of institutions are going to choose to just use Coinbase as their custodian, and then they'll earn a fee. So they're really a fully integrated bank for the digital currency world. And then outside of Coinbase, what can you do? So once you've done your dollars, you can spend it. We've discussed that, but you can also send it to the outside world of crypto. So then you can use Coinbase just as a transaction fee, right? So you put your dollars, you convert it into Bitcoin, and then you go in vacation to El Salvador because El Salvador accepts Bitcoin, and so you get your Bitcoins out, and you send it to the outside world for payments. So it acts as a payment in the crypto world. It's a big deal too here, or you can use it again just to transfer. So you take US dollars, you transfer them, say, into Bitcoin. Bitcoin is still most of a business. And then you send them to, or over tokens, not just Bitcoin, but you send your Bitcoin to your own self-custodied wallet. Because if you send it to your own self-custodied wallet, then you can own Bitcoin in your head without counterparty risk, right? You can just develop a passphrase and own the Bitcoin in your head. And then you don't have to worry about asking whether Coinbase can ever go bankrupt, which I think it's one of the most safe, but you don't have to ask can the company go bankrupt, like Celsius, like FTX went bankrupt, right? These were crypto banks that went bankrupt. You lost everything if you left it there. But no, if you self-custody it, if you just translate it in the form of a passphrase that you store in your brain, then you're safe. And remember, what is that, right? What am I talking about? It's one of these keys. So if you take one of these keys and you transfer it to one of these keys through Coinbase, so what you do is you take US dollars, you bring your US dollars here, Coinbase takes a 1% fee or 2% fee, depending on what you do, and then you send it back out right here. So all they do is you put 100, they take $2, and you have 98 stored on your ledger, and the ledger is in your head, and you just store it in your head. So again, fascinating stuff, I believe, fascinating stuff. So you can see they're at the center of this ecosystem. And I believe there's an argument to be made that Coinbase has become much, much stronger recently, much stronger. And this is sad, by the way. This is very, very sad. This is, this is sad. Like you have a lot of YouTubers that have cried about. I mean, this is not cool. What has happened with this is, so Voyager, right? Voyager filed for bankruptcy. That was a crypto bank, right? So if you left your Bitcoin on Voyager, now you're in a bankruptcy court proceeding and you have to try to get your Bitcoin back. And of course, they lost a bunch of it, so you're not going to get it all back. So same for Celsius. Celsius was the same way. If you left your Bitcoin on Celsius and now Celsius is filing for bankruptcy progression, you're not going to get it all back. Same, and most people didn't expect this one, same for FTX. FTX, a few months ago was considered to be a big threat to Coinbase. So Coinbase won tremendously once it's very sad. It's very sad, but same for FTX. Like if you had your Bitcoin on FTX collapsed. and more recently Genesis. More recently, the DCG empire is collapsing more recently. So again, you would have lost your crypto in any of these 4 digital banks if they went bankrupt. And when you store Bitcoin with Coinbase and you use Coinbase as a custodian, you want to make sure that Coinbase is not going bankrupt. And I think that they are the oldest exchange. They have a great reputation, and I think it's fair to say that that's not going to happen. But if you want to be 100% sure, and by the way, this is important to know that the execs at Coinbase tell you to do that. Like, if you want to be 100% sure, send it to a self-custody wallet and store it on your own. Send it to one of these and store it on your own, because the key of this innovation is that you don't have counterparty risk. You don't have counterparty risk. Like, anybody who has a regular US dollar or euro bank today, and if your bank goes bankrupt, you lose your money. You have what we call counterparty risk. Now you have FDIC insurance, right? That guarantees you, I think it's $250,000. In Europe, you have like 100,000 euro in their insurance. But that doesn't help you if you have $1 million, A. And B, B is they have almost no reserves on there. Like, there's almost no money on there for them to give it back to you. So anyways, you have no guarantee, right? You always depend on a counterparty, and not with Bitcoin. You don't depend on a counterparty. And so if you're buying Coinbase, you're kind of betting that a lot of people are just going to be doing this. They're just going to go from USD, right, for a portion of a portfolio. Boom, I deal with Coinbase, and then I send it on my wallet. So you go USD, Coinbase take a fee, and I send it there. And the more of these transactions happen, the more of USD to BTC, USD to BTC, the more of these transactions happen, the more Coinbase is going to make money. And this is where we get into the financial analysis part of Coinbase. So let's go. Okay, so let's talk about Coinbase revenue. So on my channel, what I love the most is revenue growth. I'm very, very fond of revenue growth. I believe it's the most important metric. And of course, Coinbase right now is not doing well because we are in what they call the crypto winter. So we're not doing well at all on revenue growth. And I would not be interested in Coinbase in normal times. But I believe that this is a great time to accumulate Coinbase. Of course, no investment advice. But so before I show you this, let's just look a little bit at how their revenue works. So how their revenue work is this. So they have transaction revenue. That's from trading, right? And that's mostly this is sorry about that. This transaction trading is mostly from people transferring dollars, US dollars, right, into crypto, Bitcoin or other. So that's how they make money. Retail, right? That's the fees. That's the fees that they charge here. That's your retail fees right there. So they charge many more fees for retail and a little bit less fees for institutional. And you can see that when retail is getting very, very excited about this, they earn way more fees when retail is getting excited. So it's essentially a trading platform, right? It's like IDEX, so it's like that big futures company. I can't remember the name of it. But anyways, it's just like a traditional financial institution, and you get told whenever there's a trade. So kind of like a Charles Schwab, but for crypto, where whenever there's a swap, you make some money. So that's the bigger chunk of the revenue. And I think that one of them, and of course this will rebound. I believe this will rebound as crypto normalizes and as the adoption gets out of this winter, and as people get objective a little bit about the innovation, you're most likely going to have some normalization in the transaction revenue, although it will be always a little cyclical for sure, because it all depends. Like if there's a brand new cryptocurrency that everybody's excited about, you're going to have more transaction fees. What's even more interesting here is the transaction and services revenue. So they make money through a lot of ways with that, and they're trying to have recurring income or services revenue. So they make money from blockchain rewards. So this is something you can't explain really without understanding the crypto space. But the blockchain rewards is essentially your staking, right? So they have a lot of crypto. that they stake. And in the proof of work system, when you stake crypto, you get the new issued coins. And so this is what that is. It's like they stake a lot of the funds that they have under custody and then make money in the form of these rewards. Then you have the custodial fee revenue. So as simple as it is, they charge a fee. You know, I don't know what's the fee, but every year they charge a little fee, a bit like an ETF. So this is kind of like a BlackRock or a Vanguard. They charge a small fee. They have other subscription services and service revenue. These are all the services they offer, advice, etc. And I think this is the most interesting one, which is the interest income right here. The interest income right here to me is the most fascinating one. And I think this perhaps requires a separate video. They make a bunch of that money from USDC. So they own 50% of USDC, right? And USDC is a stable coin. So USDC has tens of billions of dollars, and these billions of dollars earn interest. They earn interest. And who gets that interest? Well, it's Coinbase. Coinbase gets the delta between the interest earned and the interest given back to customers who have USDC with Coinbase. And let me show you this because I find this fascinating. You know, think about they earn interest on dollars. A bit like a bank earns interest on dollars on your checking account. Most banks don't give you a APY on your checking account, so they earn interest on whatever you have in your checking account. Well, technically a little different. They actually technically use that money to make loans, but that's for a different video. This is where this is so interesting. So Coinbase, so you see there's $43 billion of USD coin out there, right? USDC. There's $43 billion. So, and don't mark my word on it. I need to do a separate video on this. That's why this requires a separate video. I need to do a separate video on this. But they earn interest on a share of those $43 billion. So those $43 billion is invested, I assume mostly in treasuries, and then they earn interest. And they also earn transaction fees from whenever USDC is transacted. And that's 50%. And I think this is so crucial because USDC, I think, is the top two. I mean, it depends on the season, but in general, it's the top two stable coin. So thinking about the future, imagine a future where USD is digital, and all of the USD transacted between banks is digital. What if USD is digital, and what if this USD, a third of it is USDC, for example? I mean, imagine how many trillions of dollars are in circulation. Like, this is $44 billion right now. USDC could be, you know, it could be $1 trillion. There could be $1 trillion worth of USDC out there, and Coinbase owns half of it. Doesn't own the money, right? The money belongs to the asset bearers. The money belongs to those having USDC, but they are going to have that money as a custodian, and as a custodian, they're going to earn interest on these dollars. I mean, this is stunning. I think this is a part of a business that's largely unexplored. Again, what if this 20x's or 30x's? What if digital currencies take on? And, you know, I think there's a strong case to be made, right? So that's a big deal. I will make a separate video about this because I need to look more into this. I never realized when I invested, right, it was a tiny portion of that, but I never realized how big USDC was getting. And Kathy Wood is really big on USDC too. Like, she owns the USDC SPAC, and she owns Coinbase, of course, as well. So very, very interesting. And subscription revenue 45% year over year. This is stable growth. This is good growth. I like that. This is nice. Okay, competition. Let's talk about competition. Well, there's Binance. Binance is left. Although there were rumors a few months ago about Binance getting into the same trouble as FTX, but it doesn't seem like it. So the biggest competitor right now is Binance. And, you know, I'm being a little sarcastic here, but definitely not banks. Like, you've heard JP Morgan, 5 days ago, where you could clearly see that there was no plan and no understanding of Bitcoin. So I don't think banks are going to be part of a competition in this ecosystem. This is a concentrated bet. right? It's a bet on crypto. So of course you're going to have some concentration. Customer retention. Well, the customers stay, right? Once you have your account, you stay there. But you're not going to trade all the time. However, this is very sticky. Like the custodial business and the USDC business, that's very, very, very sticky. It's a very sticky business. So there's a share of the revenue that's cyclical, but not all of it. The macro, right? We have risk on, risk off sensitivity to the Fed, right? So growth stock, we're going to have a lot of sensitivity. So yes, there is macro sensitivity. Let me look at revenue growth. Is revenue growth healthy? Yes, there's very few purchases by acquisition. If you don't count the VC arm, and I don't count the VC arm against them. Let me talk about OpEx. So what I love in their expenses, and I love to see that, and this is I think a very good side compared to FTX. Like remember FTX, remember all of the ads. I mean FTX even sponsored a stadium in Miami. Remember FTX, all of the ads. How much were they spending on sales and marketing? I think FTX was thinking about getting some celebrity like Miley Cyrus or something, and I think they got a football player too. Anyways, not Coinbase. Coinbase spends most of the money on technology and development. So Coinbase spends most of its operating expenses on developing technology. Like I absolutely love that, you know. And of course, the accounting convention, as you look at this as an operating loss this quarter, but I think the returns on spending on tech are much more obvious. And you know, clearly when you put into perspective what they did and how placed they are with USDC, with the stablecoin, their placement in the profit structure of one of the main stable coins out there, which is an outstanding placement where they get interest income too. That really makes you wonder what other projects they are involved in. That is going to add to custodial fee, to blockchain rewards, to interest income. That really makes you wonder. And I love to see that they spend so much on technology and development. This is a pure tech company. This is not a marketing company. They are not there trying to build their brand. They know the product is good. Anyways, and I believe the company is well known. And the growth runway. How big is the growth runway? Well, the sentiment is very, very down right now. Nobody wants to hear about crypto right now. I did a Bitcoin video like 2 months ago and nobody watched it. So people don't care about crypto right now. But it will come back. It will come back. It has been cyclical, right? It will come back. And Bitcoin, crypto, and blockchain, again, that's a big part of this, could disrupt banking. Just like the internet disrupted retail. I mean, what if 10 years from now we have digital dollars on our bank accounts and transfer is instantaneous, and all of the banking system updates its coding? I mean, this is like these companies are at the heart of all of this, I believe, and the growth runway is tremendous. All right, let me go on with more pressing matters, I would argue, which is this. Any bankruptcy risk, any near-term bankruptcy risk. Of course, at the depth of anti-crypto sentiment a few months ago when Bitcoin was like at 16,000, people were like, oh, Coinbase going out of business, everybody's going out of business, sell everything, without really studying the matter. They have $5.6 billion of cash on hand, right? And they've just turned back into cash flow negative territory. But don't forget, we're going to have positive effects from the layoff. Unfortunately, they've laid off a bunch of people, so this is, I believe, going to be less negative in the future. They just went back into negative free cash flow territory. Not a good sign. But it's important to note that over the past 4 quarters, they had a positive free cash flow of almost $1 billion in positive free cash flow. So I believe this is temporary. This negative free cash flow is temporary because they've done cuts in their spend, in their expenses. You got to ask yourself, and it's pretty obvious to me, that when you see such a stark decline in transaction revenue, they were from 2.2 billion to 300 million. Like, of course you're going to have an impact. Of course you're going to have an impact. But that revenue is coming back. I mean, if you look at right now, Bitcoin is getting exciting again. A lot of people are buying Bitcoin again right now. That it's at about 23,000. People are all surprised by the move. So it's going to come back. This is going to come back, I believe. And as soon as this comes back, it's okay. And as Brian Armstrong has said multiple times, they are used, like this is a company that has lived through multiple what they call crypto winters. So they are used to crypto winters, and you can see that they are used to crypto winters because they have 5.6 billion of cash on hand. So if there is like if the winter lasts another year or year and a half, I mean, they're not going to lose 5.6 billion, right? They're going to lose, I don't know, 300, 500 million a quarter. You can survive the next winter. This company has been built to survive crypto winters. And of course, when the boom comes back on, the profits are going to roll back in with those transaction fees on trading. Those transaction fees on trading are where you make a lot of money. And this is where I think it gets interesting. Let's look at the valuation. If you look at the valuation, Coinbase right now, so 79% gross margin, revenue growth next year. Analysts expect 31%. You know, we'll see if that's so much. You're trading enterprise value over trailing 12-month gross profit of 3, and this company is insanely undervalued. And let me show you a chart that I've done. This is big tech, so not directly comparable, but this is just for comparison's sake to give you an idea. You know, very few. No big tech company has better metric on any of this. They have better metrics on every single aspect. So feel free to stop the video if you want to compare Coinbase to some of the safer investments out there. Safer, well, it all depends, it's all relative. But if it's just cheap. I mean, this company is just cheap. Enterprise value over forward gross profit is 2.15. You're paying way less than 1 on the price to sales to growth ratio. Enterprise value over free cash flow unlevered. This is trailing 12 months of a 949. Again, one of the lowest out there. Like, yeah, I believe this company is very inexpensive right now. Considering what's going on, I mean, it's clearly been battered by the market, and you know, yet it's a very innovative company. So of course, not directly comparable. I just put this chart for reference. I'm well aware it's not directly comparable. It's a riskier stock, and so there should be lower numbers. But you gotta ask yourself, should the valuation be that low? That low? Should it be that low? You know, I don't know. I mean, it's like significantly cheaper than Facebook, and Facebook is arguably very cheap right now. So, anyways, dilution. The dilution has been fine for me. There's no dilution. Not worth talking about. To me, this is fine. This is a growing company. They have a little stock-based compensation. That's okay. Company is founder-led. That's wonderful. And Brian Armstrong owns 19% of the company. If you've been following the channel, you know that I am a big fan of revenue per employee, a big fan of productivity. And at 1.35 million, this is stunning. This is much more productive than any of the big tech out there. This is a very productive company. They earn a lot of revenue for each of their employees. All right. Okay, Coinbase. So the company has been absolutely killed. Absolutely, you know, there's no other way to say it. Minus 71%. Keep in mind that when we're right here, like we were like almost minus 90%, like minus 88 or 87%. So you could have gotten this stock for $30. So very undervalued. The short interest probably has a lot to do with that. A lot of people are betting on the end of crypto, and I guess they haven't looked at the balance sheet. They're just betting that Coinbase will go out of business. I don't know what's going on, but 26%. And let me conclude by saying this. I already own Coinbase. I bought it much higher. I saw the opportunity early on, I believe. I believe this is a great opportunity. I've been adding. I'm actually very proud to say that I've been adding in the 40s and the high 30s, I believe. I've been adding a little bit regularly. It's part of my crypto exposure. So I have a little bit of a portfolio, and I know crypto is not popular right now, so I don't talk much about it, but I have a little bit of my portfolio that is crypto exposed. So MicroStrategy, right? It's a proxy for Bitcoin that you can easily buy in a retirement account. CleanSpark, which is, I think, the best miner out there right now. There's a lot of good miners, and of course Bitcoin. But Bitcoin is stored in a what is it? It's not stored on any platforms, right? It's like I described earlier with a passphrase. So that's a beautiful thing about Coinbase here. And then I would argue that you also have SoFi, Square, and Nubank gives you some exposure to crypto because they all deal one way or another. With crypto, Square is only Bitcoin, but you're going to have a tiny exposure to crypto with that. So, and I own all three of these. So how will Coinbase perform? Well, to me right now, the downside risks seem very limited right now to me. I think the upside is the highest. You know, don't forget in 2024, in first half of 2024, we're going to have the Bitcoin halving, which means that miners are going to make twice as little Bitcoin as prior. And, you know, I could go on, like there's going to be 2024, 2028, you know, 2032. Every time, every halving, you cut the Bitcoin supply in half, the new supply of Bitcoin in half. So that's why we typically see a spike in the asset, because all of a sudden, you know, trading happens at the edge, and all of a sudden you have twice as few people selling new supply, right? So that's why you have kind of a built-in, pre-programmed mathematical growth in the price of Bitcoin as a result of the fact that there's less Bitcoin, as a result of the fact that there's less supply. Like, imagine a stock that cuts supply in half, like each 4 years, if that makes any sense, or that doesn't allow half of the supply prior to be traded. It's a better way to do it. They wouldn't issue. But anyways, I think that's a catalyst. Don't forget that there's a lot of debates about Ethereum, whether Ethereum is deflationary, the second biggest crypto token, although they're a spot platform. But if Ethereum is deflationary as well, that's another catalyst. I don't know as much about that. Risk-on is coming back if the Fed reverse course, and that's my base scenario for 2023, so I think this will greatly benefit this company. Opportunities from R&D spend, like what else are they investing in right now? I think this could be a great opportunity. And then USDC. As I've mentioned, I am very, very excited about USDC, and I'll be making a separate video about USD coin in the future, because I believe this could be a master stroke of strategy from Coinbase. I mean, what if they end up owning 50% of one of the next ways that money is going to circulate between banks, and that dollars is going to circulate between banks? Anyways, there's a lot to be said about that. So, in conclusion, this was not investment advice. Thank you so much. Just entertainment. Thank you so much for watching. Please subscribe. I really need a little more subscribers, so that really motivates me to do these videos. Please subscribe. Please like. It takes the video. It helps publicize the video. Thank you so much for watching, and have a wonderful day. Thank you.